It's all happening in the weekly charts for the market. So here's the NYA weekly looking back to the COVID crash era. In particular, we'll be focusing on the sequential cluster sell countdown completion 13s. There's one recently here, and this one here back in February 22, and one was recycled from May 2nd, and that got recycled here when the sell setup count made it to 18. Look at all those 13s where those R's were. And basically the big daddies combo and sequential, and then the other ancillary ones like aggressive and cluster, phantom, sometimes if they stand alone, but regular combo and sequential are the big daddies that overrule all the rest of them. However, right up there in importance with those two is the sequential cluster. So when all those R's printed back then in 21, that was an indication of potential upside to ensue or going sideways, and it did both of them basically. So went sideways there. You can see if you drew a line here, and then it had a blow off top here and then started drifting down. Actually, the blow off top was up here in January of 22, and then it had the last gasp here, printed the sequential cluster 13, and the rest is history. And we certainly did get a lot of red trend bars during that era. And all that could be a Maalox moment of worry, but fast forward to the current day, and all of these levels here, aggressive combo, combo sell risk, sequential sell risk, are all qualified status at the end of last week, along with the weekly 50% momentum up. And that makes the weekly 50% exhaustion up qualified too, but not yet confirmed. So we have to give the resiliency of the market and all of its participants the benefit of the doubt for the potential to push this higher and give qualified and confirmed status to the aforementioned levels. So I'm not totally 100% sure, but pretty close, up in the 90s, that if the markets open higher, meaning the S&P, the NASDAQ 100, and the Russell 2000, higher than this close from this week, and does not tick lower than this close for the entire week. So in other words, a tail, like here's the close, and you can see the low is lower than the close. So as long as there's no low and we just keep heading up for the entire week without coming back down below this close, then tick higher than this high here during the week before end of day Friday, and close higher than this close for end of week next week Friday, then those levels will become qualified and confirmed. And then you could put the Maalox bottle away and start focusing on higher levels. Here in this chart, the weekly phantom combo stands alone by itself right now, so there's one level. And right underneath it is the new sequential cluster sell risk level, now disqualified. You can see the old one here from way back in the day, 2022. So that one stopped, and now we have a new one. And in the daily chart here, the daily Pitchfork chart, you can see the broadening top pattern stopped right there, but we extended it with this dashed line for the upper and down here for the lower line. And that actually has a horizontal line here at hit number 4, 17,562. And zoomed in, the horizontal line for hit number 5 is right here at 19149. So I am going to add my own twist to the qualified and confirm process for the daily charts by adding this daily broadening top upside breakout line for being qualified and confirmed. And you can see its measurement level up here for a target 2720. And there's some decent levels to get qualified and confirmed potentially underneath it. So this daily aggressive sequential, the daily relative retracement up 3 back from that era, 22 again. The daily 50% momentum up, which the weekly is already qualified, and in the confirmation process for this coming week. And then another relative retracement up 5 from 2023, so there's 6 levels in the retracement, and it's on 5. And I actually paused and added that 6th level here, so 19,404 is the last level for relative retracement from 10/27/23. Anyway, my thought was, if the qualified and confirmed process happens for everything under this level here, the broadening top upside breakout line, such as I was saying, the daily aggressive sequential, these relative retracement ups. So if that happens in between 19,102.38 and 19,149.54 and gets qualified and confirmed without qualifying and confirmed this upside breakout line, then I would start reaching for the Maylocks again. That's a bit worrisome. But if they all become qualified and confirmed from above this level here, then we really got something going on. And here's the targets up here. First, get past the Pitchfork 1, and then there's all these other ones here. And if that does happen and starts moving upwards, then I would set the sights on this qualified and confirmed daily 100% propulsion exhaustion up, and then the weekly. That's a really tall order, all of the above we just mentioned.